Managing an LLC effectively can mean the difference between business success and legal headaches. Whether you're starting a new venture or looking to improve your existing LLC structure, understanding the key management principles is essential. Limited liability companies offer the personal protection of corporations without the complex requirements. They're easier to create and less costly, making them ideal for businesses that don't plan to raise significant capital. The first major decision when managing an LLC is choosing between member-managed or manager-managed structures. In a member-managed LLC, all owners actively participate in running the business. This is the default in most states and works well for small businesses where owners want direct control. In a manager-managed structure, designated managers handle daily operations, while other members take passive roles. This structure resembles a traditional corporate hierarchy and works better for larger LLCs with passive investors. Your choice must be documented in your articles of organization when forming the LLC. This foundational document creates your LLC and must be registered with your state's corporate division, usually through the Secretary of State office. The filing typically costs around $100 and requires basic information like your business name, address, contact details, and registered agent information. Speaking of business names, select one that complies with state requirements, typically including LLC or limited liability company in the title. You'll also need a registered agent with a physical address in your state who can receive legal documents during business hours. The cornerstone of effective LLC management is a comprehensive operating agreement. While not always legally required, this document outlines the management structure, voting rights, profit allocations, and procedures for adding or removing managers. It should detail succession planning, dispute resolution processes, and clearly define each member's authority limits. Even for single-member LLCs, an operating agreement helps establish your business as a legitimate entity and protects your limited liability status. For manager-managed LLCs, clearly define how managers are elected and removed, their powers and limitations, and compensation structures. Some LLCs adopt a board of managers similar to a corporate board of directors, where multiple managers make collective decisions. This can streamline business direction and prevent management deadlocks. Proper financial management is crucial for LLCs. You'll need an employer identification number from the IRS, which is free to obtain and necessary for tax purposes, especially if you have multiple members or employees. LLCs offer flexible tax classification options, defaulting to disregarded entity status for single-member LLCs or partnership status for multi-member LLCs. However, you can elect to be taxed as an S corporation or C corporation by filing the appropriate forms with the IRS. One of the most important aspects of managing an LLC is maintaining separation between business and personal assets. Always keep business and personal finances strictly divided. Courts can pierce the corporate veil and remove liability protection if members commingle personal and business activities. Use separate bank accounts and credit cards for business transactions and sign documents with your full company name, including the LLC designation. Consider obtaining appropriate insurance policies to protect your assets beyond the liability shield an LLC provides. Commercial insurance can safeguard against lawsuits, though it typically won't cover unpaid business debts. Staying compliant with state requirements is essential for maintaining good standing. Each state has specific rules regarding annual filings, fees, and other paperwork. Failure to comply can result in penalties or even dissolution of your LLC. Some states like New York and Arizona require publishing a notice of formation in local newspapers. Others mandate franchise taxes or biennial reports. Effective day-to-day management includes holding regular meetings and documenting major decisions, maintaining financial transparency, assigning clear duties to members or managers, establishing internal controls, and keeping accurate business records. Many growing LLCs benefit from appointing officers with specific functions, similar to corporate roles. Common pitfalls to avoid include mixing personal and business funds, ignoring tax obligations, failing to update records when membership changes, and poor communication between members. Addressing these issues early ensures smoother operations and preserves your limited liability protections. Managing an LLC successfully requires attention to both legal compliance and operational effectiveness. With proper structure, documentation, and financial practices, your LLC can provide the perfect balance of liability protection and management flexibility for your business needs.